If you're trading futures or equities and not using volume-based zones, you're missing key levels that institutions are defending every day. Let me show you how I use the V-Box to find high probability scalp zones in seconds. Now let's get right into it. The V-Box is a visual representation of volume imbalances. It highlights areas where a large amount of volume is traded in a tight range. So for example, we're looking at the 5-minute chart on a 5-day time frame, and the V-Box is this gray box I'm hovering over right now. It's really highlighted over tight ranges, and it focuses on where the large volume is during that tight range. And for example, you see during this five-day time frame, around 1500, we had a big pop out of the V-Box, lasted for about an hour and a half, and then slowly traced back and then rejected right off it. So I use the V-Box usually for NQ and ES. Right now we're looking at QQQ, the ETF, and I usually do it during the New York Open. But to sum it up, the V-Box is usually centered around a high volume node. So if we zoom out, obviously it looks a little funky now. We zoom back in, you see pretty tight range over here. Pretty tight. Not really breaking out of 552, yet holding 551. And it's just a small range of where the volume is traded. And when a price breaks out of the V-Box, like it did here, or it goes under the V-Box and it breaks down, I'm usually looking for a strong rejection of whether it's going back into the V-Box or flying right out of it, and vice versa. And that's why I mark the top and bottom of the box as key support and resistance, and I have my numbers labeled for each symbol. And honestly, it does look really confusing. The width of the box doesn't matter. I'll show you on a shorter time frame, on the 1 minute. And yes, it does look a little more confusing. We zoom in a little bit, you could see staying in the V-Box, big volume spurt, jump out of the V-Box, jump right back in, more volume, V-Box adjusts for that pop, and the V-Box, little dips below, rejects breaking down of the V-Box, goes back in, hovering, and then to finish the day we had a little bit of a breakdown, and that's pretty key going into the next day, which is going to be Wednesday, July 9th, 2025. So that's definitely going to be key to see how it reacts, especially in pre-market, but more importantly, New York Open, to see if it pops back into that V-Box. But really, what I'm trying to say, it's not magic. This is just one of the indicators overlaying on a chart that I use. I don't usually like to mix and match indicators. This V-Box is pretty experimental for now, but it's just a clean way to define structure, especially when you zoom it out. Let's go to the 180-day on the 4-hour, and you can see obviously the market has rebounded phenomenally, and you can see in the V-Box, slowly breaking out. V-Box adjusts for the increased volume, big breakout. Obviously broke out of the V-Box, did not touch back down. V-Box adjust, staying, consolidating the V-Box, another breakout. So it's very key to watch, especially on these longer time frames with the V-Box, to see if the breakout or breakdown holds. Let me get out of this. But anyways, this is just a quick breakdown of how I use the V-Box. It's a simple tool with some high value. This is on Thinkorswim, by the way. You could create this indicator for free. And I'll be posting more about how I stack it with other setups. And if that's your style, subscribe and stick around. Please have a great day.